Good morning, Miss Melanie.
Well, hey there. Good morning.
How are you?
I'm great. How are you doing today?
I'm doing real well. We've got some folks tumbling into the podcast, so I've only got about a minute to the top of the hour, so then we'll get started. But I think you've been a busy lady with some training. Have you caught up with yourself yet?
I don't think that'll ever happen, but that's how I roll. That's how we all roll, right?
Yep, that's exactly how we roll. That's why calendars were invented.
Without a minute to spare, yeah.
Yep. Well, I've got the top of the hour, so let's go live. Good morning, everybody. This is Angie with Producers XL, and of course, if you're listening in, it means it's the last Tuesday of the month and it's podcast day. And so we're going to talk. I'm very excited. I've got Melanie Hertz with Thrivent on with me, and as you guys know, I don't usually do like these product sessions. But when we've got new entrants of product solutions, I feel that it's definitely worthy of its own podcast session. And so what we want to bring to you today is like a drum roll, introducing Thrivent's new product called CareForward. And so Melanie's going to kind of come on here, and you know me, I like to banter back and forth and let her give you kind of the highlight version, if you will, of really where the sweet spots are for this product. Most of the people, Melanie, that listen in on my podcast, they're definitely what I would say LTC seasoned, right? So they're going to understand the hybrid, the linked space, and kind of what the concept of these are. I really kind of want to do a little bit of a dive into what makes CareForward special, what sets it apart from the industry, because I do believe there are some things that make it unique in the space. Of course, you know me behind the scenes. I've already done my analysis. I've been running illustrations, comparing it back and forth, and pretty excited about this. Want to also maybe preface this with, and I said this on last month's podcast, but I have returned from the ILTCI conference, which is where a bunch of us long-term care junkies get together, and we go to all these sessions and we do a lot of networking. And Melanie, you guys were great to have me in a room to kind of do some one-on-one training with CareForward prior to the launch. And the one thing that still, and I guess I'm so dumbfounded by this, but one of the sessions that I sat in, they came back and they said, 86% of, I'm going to air quote, long-term care solutions are being sold as a non-premium charging rider on a life insurance policy. So we need to understand that a non-premium charging rider, what that does at claim time. And that's completely irrelevant to the CareForward solution that we've got. And that's what makes me excited to bring to the audience solutions that really are long-term care solutions. And that's exactly what CareForward was designed to be. Would you agree?
I sure would. I mean, here at Thrivent, we've been in the long-term care arena since 1987. And it's been an important aspect for our members, having a meaningful long-term care benefit that was tax qualified, that has the care coordination in it, bed reservation, all the things that as a specialist you might glaze over as you're going through these things, on different types of solutions. But at the time of claim, those are the things that are going to be hands down so valuable to your clients.
Mhm.
And I think, just your clients come to you expecting to get a quality solution in place. We've been working on this solution for at more than a couple of years. We thought it was actually we thought it was going to launch in the fall of 2019. And,
Oh, wow.
and of course, we wanted to make sure that it was in a really, really good place. We launched on Monday in the independent space in 48 states. And it truly is, meaningful, comprehensive benefit, like you'd expect from a A++ rated solution with a Comdex of 100.
Beautiful. Strength and stability, because when we remind people, when you look at an extended care solution, you're looking at it for the long term, right? We don't buy this coverage because we think we're going to need it in a year or two. So the strength and stability of the carriers is really important. And I think that the agents that I work with, they kind of rely on me to do that due diligence on the back end and bring to them all the strength and stability. So this is really exciting to come forward with this new solution, especially in this time, really in this interest rate environment, knowing that you guys are still confident enough to go ahead and launch the product and the solution that it brings. As well as, it's interesting. I was on the phone yesterday and I said to myself, I really need to be writing these down as articles, because it's amazing the conversations that I had with a financial advisor yesterday about a client who they're in their 80s, right? So we're not rewriting, we're not terminating contracts or anything of that nature, but she has a husband with Alzheimer's that is on claim receiving benefits, but only to the tune of $75 a day. And the farm is in an irrevocable trust. They've done all the planning in place. The bad thing is she's going to go broke while the husband's receiving care using the IRA money, because the long-term care policy is not enough. And so I love bringing meaningful solutions, and it's really just about having the conversation. Just bring up the conversation of extended care planning.
Yeah, it is about having that conversation. And, when you can figure out that folks have determined that long-term care, having a strategy in place is important, that's where this CareForward solution is absolutely gonna shine. We can market this solution all the way down to age 18. So from, that's going to be a differentiator in the linked benefit space, down to age 18, up to age 79. As far as having that meaningful benefit, you can go as low as $1,500 a month, all the way up to $15,000 per month. So, with the live, die, or quit concept, you don't have to worry about the use it or lose it concern that some folks might have with traditional. So, and probably the coolest component of all, when you're looking at a linked benefit solution, some of the carriers really highlight the acceleration benefit rider and the extension benefit rider. Now, we try not to get too terribly tangled up in the weeds, but when you buy those riders, what you're accelerating is the death benefit.
Yeah.
To keep these policies somewhat affordable, I think, if you can accelerate the death benefit at a higher percentage, in this case with CareForward, you can accelerate our death benefit by 3%, 4%, or 5%. And what that, if you accelerate it by 5%, you're going to have a little bit smaller death benefit. So it's going to be a whole lot more affordable. There's a lot of cases out there. Obviously it's still going to be based on your client's age and their gender and their health, all of those things, right, come into play, their marital status, all come into play. But all things being equal, if you think about just general leverage, being able to accelerate the solution by 5%, there's going to be a lot of cases where you can get into a CareForward solution for about the same price as a traditional. There's a lot of moving parts with our CareForward solutions. You can really customize the strategy to get into a price point that works for your clients. I think that if these solutions were free, everyone would have them. And if we can take away the sticker shock, and I think it'll make a huge difference.
Melanie, I'm glad you said that, because in my mind, when I think about CareForward, I think about all the things that you're accustomed to in these types of solutions, but there's two levers, if you will, in this customization. So you think about, how big do I want my LTC bucket to be, 1, 2, or 3 times, and how fast do I want to accelerate that bucket, the 3, 4, 5%. And the great thing is that's the agents that I work with, again, they kind of want me to know that sweet spot. So kind of go through your benefit multiplier and that payout percentage, and kind of really where that sweet spot lands for you guys.
So, you can go as low as a 20-month contract. And to get to that 20-month contract, what you're going to do is you're going to accelerate that death benefit by 5%. And then with your face amount, as you're saying, you can accelerate, you can take that face amount times 1, 2, or 3. To get to the 20 month, it would be a 1 times multiplier. Now, you all know that accelerating just the death benefit isn't going to be the best leverage for your client's dollar, right? If you can go at least by 2 times the death benefit, or 3, in my opinion, if you go at 3 times the death benefit with a 5% payout, that's going to get you to 60 months, 5-year duration. For a lot of reasons, besides it being priced in exceptionally well, it really is a sweet spot for us by design, that 5-year benefit period. Now, again, you could take it 4 times acceleration, go with a little bit lower, just a hair bit lower benefit amount. A little bit, when you lower the percentage payout, it's going to give you a little bit more death benefit. When we built this solution, we are wired for long-term care solutions. So it was never really intended to be in place as a death benefit. The death benefit in our minds is more of like a money in, money out, kind of an afterthought, where what we designed this solution around is to give you the most robust long-term care benefit on the market. And that's, to get to that robust benefit, you'll want to take the death benefit, accelerate it by 5%, and then you leverage that multiplier. 3 times the death benefit is really going to give you a strong pool and the best leverage for your dollar.
Yeah, I agree with that. And it makes it, and I'm sure a lot of folks on the podcast this morning are probably thinking in their mind, not quite connecting all of these dots. But if you just want to see an illustration, I would encourage you to, get in touch with me. Let me show you kind of what it looks like, because it really is not that complicated. Yeah, there's some moving parts, but that's what we're going to help you do, is design that right solution. And, like you said, a lot of that comes into play if it's the age of the client, are they older or are they younger, and what's the best solution for them.
It really is the moving parts that make the magic happen. And you've got to say, Angie, isn't it fun quoting this? I mean, it is absolutely mind-blowing watching these numbers come together and what you can do for your clients with this type of a structure. That's why you rely on folks like Angie to help build these. It is truthfully a joy to understand the scenario of what you're trying to solve for, and then just let Angie go to work and make this thing come together. It is magic watching the moving parts come together, and how you can take it to, back in the day when I started this industry 19 years ago, these linked benefit solutions were all They were all single pay, right?
Yeah,
And now,
yeah.
we're lucky to have 20% of these come in as a single pay, and folks do use single pay for 1035 opportunities, absolutely. But for all of them that they know they have the need, they know that they should do something, but how are you going to pay for it, right?
Right.
People feel insurance poor. People, there's a lot of
Hmm.
reasons that it can go on that pile of good intentions versus, they need to think about it. Um, and if you can show them that you can make this affordable, do a 10 pay, do a 20 pay, do a pay to 95 if you need to. The thing that I love too about our solution, something that's different, if you go with like a pay to 95 is a really hot spot with ours,
Uh-huh.
CareForward. So you go with a pay to 95 and your client goes on claim. The premium is waived with our solution. So it's not like, even though they're on a pay to 95 payment schedule, when
Hmm.
they trigger that claim, they're still going to have, they're going to get the premium waived, which
Right.
is huge.
It
The
is a
other thing
big
that's
deal.
just crazy about our solution, with linked benefits, the death benefit is of course the first thing to go. So
Right.
you trigger a claim and the client's on claim for 20 months, and then the death benefit has been exhausted. They continue going on claim, and then miraculously the client gets better.
Hmm.
With our CareForward solution, you have it breaks out the cost for the life insurance
Hmm.
and the cost, because it's a whole life policy, and the cost for the and it also breaks out the cost for the long-term care benefits. So if you exhaust that death benefit and recover from your claim, you're only paying for
Yep.
the long-term care portion of the premiums.
Yep. Love it. And let's not forget, right? There's still some tax deductibility opportunities there because there is a separate charge for the long-term care versus the life insurance.
Absolutely. And if you're looking for the tax deductibility card that you want to play, it's going to make a big difference when you pull back the death
Hmm.
benefit and have that long-term care benefit be a more
Hmm.
significant charge. There's going to be more to play with there as well.
Yep. I love that. I love that idea. And I love the fact that you can actually, because we're seeing folks in their, late 40s, early 50s, I'll call them young professionals, they're watching the effects. They're still raising their family, paying off the mortgage, but they're seeing the effects and they're watching their parents age. And a lot of them, I'll call them sideline caregivers. You've got one of their adult children is kind of more engaged in the health of a parent or a grandparent, and the other one's just kind of the backup if the other one takes a vacation or can't make a doctor's appointment or something. They're seeing the effects of that and they're thinking to themselves, whoa, I don't want to do this to my kids, because it becomes a secondary part-time job. And to some of them, and obviously you guys know I'm speaking from experience, my husband and I are those sideline caregivers. And my sister-in-law happens to be full-time nurse, full-time caregiver after her full-time job. And it allows younger folks to get into these contracts, fully guaranteed premiums. They can go into these, find a solution, and build upon it. And I love that idea that you can actually take those young professionals, even on a pay to 95, right? The idea is that they're going to be on claim or death, more than likely. So the waiver of premium does come into play there. Um, I just think it opens up a market. The situation being is we have to be confident enough to go take that to that younger age and to that market space, because they need to hear about it. It's nothing but an education platform. Talk to them about it.
It's crazy when in 2021, Thrivent's average applicant age for traditional long-term care was 48. It is
Wow.
absolutely at the forefront of folks' minds, and you look at the advantages to as far as like the accelerated underwriting for those younger brackets will actually accelerate the underwriting for clients 60 and under. But I mean, even if they have to go through full underwriting, just to have a meaningful benefit in place like this is going to be huge. And you know, the thing is, our solution, there's several different inflation options out there. With our solution, you can do a 3% compound, 5% compound, or even like a 3% compound with a 20-year cap. We built this policy so that we want the inflation to go to work for you. Your inflation isn't going to go to work for you until you make a policy, right? Until you sign on the dotted line, that thing is in force. Your inflation isn't going to start growing. We did a couple of these younger clients in their 20s and 30s and showed them, you know, pay to 95, and then of course they come back. Well, what would a 20 pay look like? And then it was like, well, hold on a second. What would a 10 pay look like? And you know, it's like they can see the end. You know, they've got a lifetime of growth on these policies. It's guaranteed all the way around. And you know, as much as I don't like the idea of being able to surrender these, it certainly opened my mind just to keep in your back pocket, right? I you know, you want to have that policy in force at the time of claim. Absolutely. That's why we do what we do all day long. But you know what? If something does completely fall apart and you need to surrender it, you have a guaranteed amount that you can cash out if you do get into a pickle.
Right. Right. And that really is the story about not all hybrids, right? But it certainly is the story with most, that whole live, die, quit concept. I want to make mention too. I mean, let's talk about robust benefits. How about first day coverage for home health care?
We believe so much in having being able to let the client receive care in the comfort of their home when they need it, so that they don't have to change their setting. They don't have to dip into their own pocket. They'll get the care that they need when they need it. So with our CareForward solution, we do have the first day home care built in. Each of those days that you use for home health care are going to count towards your facility elimination period, and it's actually a 1=7. So if you receive care just one day a week in a home health care setting, it'll knock out 7 days of your elimination period. The facility elimination period on CareForward is a 90-day. You know, but you can knock that out pretty easily with by receiving home health care right out of the gate on a 0 day.
Yeah, I mean, strong benefits. You know, things that maybe when the agents are out there talking about it, you know, you'll know first day coverage, home care, 90-day facility care. Maybe you forget the 1=7, but guess what? It's a richer benefit when the client goes on claim. And even though maybe that was overseen or not expressed or not explained, I mean, that's in the consumer's best interest at that point.
You know, these policies, they also include things like care coordination, equipment and home modification benefits. We will give you caregiver training, respite care. There's an alternate plan of care baked into this. Bed reservation and an international benefit, which is 2 times the monthly benefits. The international benefit is maybe a little light, but it'll at least give you time to get back into the country so you can receive care on a more permanent basis. But you know, those are going to be your big hot buttons. Really, it just comes down to, like you said, planting the seed, having that conversation, helping accentuate why creating that long-term care strategy is important. And you know, maybe you know, when they do show a little bit, you know, just dig a little bit deeper, ask a couple more questions. Do you see this impacting you financially, physically, emotionally? You know, and you know, how's that going to play out? And for anybody that has had any type of experience in providing care or coordinating care, they'll very, very quickly acknowledge that they need to get a plan together. the best time to plant a tree was 20 years ago.
Yeah.
The next best time is today.
Yep.
We are so fortunate to have this solution available for you all today.
Yeah, I'm really excited about it. I'm looking forward to all the quote requests I'm going to get. Question for you on your rate classes, right? So obviously we have tobacco, non-tobacco, and then we have class 1.
Mm-hmm.
I want to ask you on this, so everybody hears, is that class 1, I don't want to say substandard, but is that like a rated class 1?
So this is interesting. It's rated in that it's going to be higher, a class 1, like a tobacco or a non-tobacco class 1. So there's 4 rate classes total: non-tobacco, tobacco, non-tobacco class 1, tobacco class 1. It's rated in that it's going to be more expensive. What I love about our solution is that if you get rated with CareForward to a tobacco class 1, for example, we're not going to chop up the benefits. You know, if you applied for whatever benefit you thought was suitable, I mean, those are the folks that need it, right? I mean, those are the ones that are, they've raised their hand, they've identified, they've recognized that they maybe their health is going to be a little bit more challenging. The more the merrier, right, at the time of claim. So we are not going to chop up your benefits and give you a watered down policy on the back end after you've sold something robust, and then they're kind of frustrated because they maybe got rated. Right. If you can at least offer them that same meaningful benefit, it's certainly going to make a difference.
I love that, Melanie, because you're right. Sometimes you fall into a class 1 rating and folks are like, oh, well, now you can't have more than this, or you can't have more than this benefit. And you're basically saying, and what I'm hearing is we've got some underwriting flexibility. And if we do end up, I mean, tobacco class 1 would be the highest rated class that they would qualify under CareForward. But we're basically saying, even if we approve you at that, you can still have the benefit you applied for. But there's just going to be a higher premium charge. So what it does for us to the consumers gives us some flexibility. If they're like, whoa, I don't want to pay that much, we've got the flexibility then to come down with the benefit structure and all the levers that it's got. We can start kind of moving those levers and seeing, does this work better? Can we fit this spot right here? That's what I really enjoy doing is not having rated cases, of course, but having the flexibility of knowing that you can still meet that client's needs and come back with a very meaningful solution to them where they don't feel like, oh, well, yeah, the insurance company just didn't want me.
That's it. They're willing. And I mean, usually people will understand that, if it is a higher risk, they're just, they're grateful to be able to have that coverage in place, especially when it is at the level that they were hoping to get. And with all of our moving parts, you can make sure, even with a rating, you can modify those benefits if you are on a particular budget, and you can actually, there's 4 different ways to structure this. So you can structure it on a monthly benefit of whatever, $4,500 a month, if you will. You could structure it on that total long-term care pool, starting out or at age 95 or 100 or whatever you want to do. Very, very flexible in that. You can also structure it though by either the face amount or the premium. So if you know that you can pay this CareForward on either a monthly basis or an annual basis, so you can actually put in there like a monthly budget of $250, and then go into the software and say, okay, well, based on this client's age, based on their gender, based on their marital status, what can I get? And that's where Angie is going to come in and help you with the packaging. If you do want some additional insight, on how to make this look good and how to get the best leverage, for your client's premium dollar.
Yep. I love it. I'm very, very excited about it. And I'm sure everybody's kind of seen some of the information that I've pushed out about it. But I thought it was perfect timing, wasn't it, Melanie? We were at ILTCI and I was like, oh, I'm going to need to have you on my podcast because it's perfect on the launch.
The timing couldn't have possibly been better. This is on the career side of the house. This has been available for 6 weeks. So, we've starting to make sure that everything is coming in smoothly, and seeing what those, the buying trends are and stuff, which, the tools are just getting cleaned up, have just a ton more stuff getting launched and in your hands like daily. So it's just an excellent time to be a partner with Thrivent.
Couldn't agree more. Pretty excited about it. And I got to tell you, I wrote on my little CareForward at a glance, I wrote moving parts, make it magic. And I love that. And I'm going to use that when I'm talking to all the agents out there when they kind of want to know, how do we build this? How can we structure this? So Melanie, I usually kind of keep my podcast 20, 30 minutes or so, but I want to leave you with any final words that you might like to share with the audience in the new CareForward solution through Thrivent.
As I have looked at a lot of different solutions over the years, as have you, Angie, I think that's probably what is probably one of the greatest things. If you just if you go back to the foundation,
yep.
What are their concerns? What are the gaps? Their why? Foster that relationship. Challenge yourself on how you can exceed their expectations. With CareForward in your back pocket, being able to really customize, whether it's a particular benefit that you're trying to get to or a particular budget. There's a lot of different ways that we can put this solution in place, so that at the end of the day, it comes down to being the fuel to help your clients meet their goals. Here at Thrivent, we are in the business for building confidence, getting folks to their full potential. We are here to empower families to finish well in a meaningful way. I think that there's no better solution than Thrivent's new CareForward solution to help get them across their finish line.
I love it. That's really what it is. It is truly magical when you help families out in what is very much an emotional and financially difficult time when someone's going into extended care. And so really just getting the word out. And I couldn't be more excited that Thrivent actually has a CareForward. I know when you guys told me early on that you were launching, I was like, yes, this is going to be some good stuff. So we are not lacking in the way of solutions. We've got all the solutions that your consumers need. I mean, it's wonderful because now Thrivent's going to come forward with a very strong, stable carrier. I mean, reputation, ratings. They've got the traditional space. Let's not forget that traditional also has a 10-pay on it. And now we've got the CareForward, so they get to compete in that space as well, because, according to the ILTCI, everything's swinging over to the life insurance base. So couldn't be more excited that Thrivent's coming out with that type of a solution as well. And I look forward to having all of you reach out to me and say, hey, Angie, let's run some quotes. Let's see what this looks like. And Melanie, thank you very much for being on my podcast this month. And I look forward to flooding your doorstep with lots of applications.
Thanks, Angie. It's so much fun to chat with you today.
All right, everyone, take care, and we'll talk to you next month.